Traders, Anthony here. I'm looking at the DXY prior to the London Open. Just want to get a bit of an idea of how the US dollar might perform, and I mean that's going to impact dollar pairs, gold indices, the markets in general, pretty much. So we can see here the DXY is bullish, but we've got this ranging price action. I am bullish, that's my bias, but where to from here? Does it drop back? Does it push up? That's what we're going to talk about in the video. I will mark up some key levels. Now we've traded into this level here. The stops resting above this move have been taken out. In my next port of call, this range, we've got these highs here, it's been tapped into. Next port of call is going to be these lows and highs above these candles, and then finally over here. So if we're looking for targets, we have these key levels marked up. If we go down to the lower time frame, then we can set targets according to whether we think price might react. From here, I'll just take that out. We don't really need that. Look at this price action and consider this. Grab a Fibonacci. I'm going to pull a fib from this low here, low to high. Notice that price spiked down. We had a bit of a touch on the 50% level of the fib here, or this 50% of this price swing. You know, I'm always looking for an entry point below the 50. That's my threshold, discounted zone down in here. So with this move, we had a touch on the 50. It didn't really pull back into it. But I mean, see how this is ranging sideways. Smart money is looking to basically build liquidity so they can trade it. Generally, they're going to trade it into a discounted zone, or they're going to build liquidity by setting up this range. And you can see here how it spikes up. It causes traders to go long. They set up stops under here, and of course it spikes down and takes those stops out, and it helps them or enables them to pair their orders long. So we've got the same thing going on here. Let me just delete this fib and we'll have a look at the next price swing, and then we'll look at this final price swing over here where we're currently trading. This price swing here, if we go from low to high, see how the fib pulled down right into the 61.8 zone. So again, they're working this level here, pairing their orders with this move for a buy. Yeah, I mean, after a fair bit of mucking around in here, they spike it back down and then we get a move. With this final rally, okay, we'll grab the Fibonacci again, go from low to high. What I'm not seeing is the move into the 50% or 50 to 618. And I'm just wondering whether we see this. Okay, let's just have a look at this on the 4-hour time frame because I want to discuss this. This range, be careful here, because I'm thinking that we might see an aggressive move south. See how we've got these equal lows here? Well, we've had a bit of a dip under it, but not really significant. Let's just pull that up. We've got a double bottom, bit of a dip under, not significant. And I'm thinking that this could quite possibly drop a bit lower. See, they're pushing it up here. That's going to entice long traders in, and that will obviously build more liquidity under here in the form of sell stops. So I'm thinking that actually drops back down into here before we see a move north. So I'm waiting for this. And so in terms of, you know, the pound dollar, euro dollar, etc., just watch out because it could spike in the opposite direction before we see the these trends continue. So I'm always a little bit wary. Can it just roll over here and continue north without tapping into these levels? Of course it can. But given how historically we usually get a touch on the 50, between the 50 and 618, That's what I'm anticipating. So I'm just going to set up possibly limit orders. For example, if I'm going to be buying, I might just go for a limit order down in this level here. And that would apply to the currency pairs as well. All right, so go for 2R reward, risk reward, something like that. So that could be worth considering. And you may miss out on the opportunity, so be it. I would prefer to get in at a discount if this pulls back down in here. So, I mean, look, the other thing is just to watch it, and if we see a break, let me just delete these, a break of this here, this range, if we see something like this, break above, retest and failed, I mean, that could be an entry point here. Okay, so that's one scenario, and then the other scenario is just be careful, you know, because it could hit the lows. There you go. All right, so there's a couple of ideas. If it does happen to break above, retest and fail, there's an entry point. And if it trades south, then there's an entry point down in here. You could wait, if you're watching it, if you're in front of the charts, just watch it through the London Open and the New York Open. Just see how it behaves. Now, if it trades down into the London Open, there's a good chance that we see it rotate and then trade north. If it trades up into the London Open, be careful. I mean, it could you know, it usually gives a rotation around the London Open, so just watch that. All right, guys, that's my take on DXY. I mean, I'm bullish, looking for the break, and with that, love to hear your comments, definitely. Safe trading. See you in the next video.